Hey everyone, Michael here. Welcome back into this segments on the InvestWell show, talking specifically about the idea of how to sell your business well. You're going to love this segment today because we're going to talk about the idea of how to keep as much as you can when you sell it well. It's so important to maximize, keep what you want, when you want, as you want, to live how you need to live. We're joined again by Nick Geraci, our private tax director, and Steve Extraordinary. We call him Snowman around the office. He's a great guy. So guys, let's talk about this. This is so important, Nick, when we talk about making sure that you're keeping what you can, right? Maximizing that.
Because it's not just about what you sell your company for, it's how much you keep at the end of the day, right? So this is a big portion of these types of engagements, right? The tax planning starts for us as soon as we know that the client is looking to sell their company, right? There's things with the entity optimization we've talked about a little bit before, qualified small business stock, making sure that the entity is set up correctly to minimize tax on that sale. And then of course, that's all pre-actual signing of the LOI or signing of the dotted line to finalize the deal. Also moving into, once the money has come in, what can we do? What assets do you currently have that we can utilize as a tax planning alternative? Other investments that we can bring to the table to generate deductions in this year where your income is probably going to be substantially higher than it ever has been in the past, subjecting you to those higher income tax brackets.
It's like a big windfall. Steve, we see this all the time. It's like, your income a client's income maybe goes way up for the year because they've made this sale. Maybe they sold a portion of a company or an entire company, whatever it is. And now they're in a place where like, gosh, I'm going to get hammered in taxes. Now, oftentimes what happens is most advisors or firms out there are just happy to get that new asset inflow, manage the money and try and do their thing. But they're not really focused on saving money in taxes on the journey. A lot of ways, like we have along the way. It's been a beautiful thing. What have you seen?
Yeah, and I think with a lot of professionals out there, the priorities can be backwards, and a lot of the times it's sad to say, but selfishly for the professionals looking to bring in new business. And I think one of the things that our team does a great job at, and I know you guys probably like simple, but a simple 2-step process: pre-sale tax planning and post-sale tax planning. Nick, you probably agree with this. Selling a company is an overwhelming process. There's a lot of work. There's a lot of negotiating, talking to your attorney, talking to your advisor, talking to the CPA. And the last thing you want to think about the day you get your check is, all right, how do I get this done? How do I reduce my tax bill? And I think our team does a great job of really getting the clients dialed into step one. Let's get the structure right. Let's get the right offer. Let's accept the offer that's going to benefit me most. And then right after that, we get into planning the right investments, the right structure, to then significantly reduce the tax bill.
Yeah, guys, we talked a little bit about the idea of like one simple analogy was a business owner that may have owned real estate that they rented from themselves, essentially, and then they sell their business and they maintain the real estate so that way they can qualify for certain designations and get them additional deductions. I mean, these are just small things that maybe a particular advisor or a firm or maybe themselves might say, gosh, I might as well just sell this too, and then I don't have to worry about it, I don't have to manage anything. And maybe that's the right approach, but maybe the better approach is to say, okay, let's slow down. Let's look at and create option 1, option 2, option 3, and see long-term, right, Steve?
No, 100%. A lot of the times, everybody's situation is different. You may be sitting on real estate that is used by your company that you can then leverage after the fact. And I think one of the things that we found, especially whenever large companies are sold, 50 million, 75, over $100 million, is, they've been in control of their business. They've been in control of their income. And then that next stage of life, not only can some of those assets that they still hold on benefit them tax-wise, but makes them more comfortable in the next step of life.
Well, and Steve, when you said leverage, just to clarify, as you're watching this, we're not talking about leverage where you're going to take equity out of the property and then go invest it in other things. We're talking about maintaining certain types of real estate so that way you can qualify for deductions, Nick, that you may or not earn.
Leveraging the tax code.
Yes.
Right? It's a holistic plan that is required with something as complex as selling your company in any form, right? And the tax code is there to be used by business owners especially to generate these deductions to help you save more money and put money back in your pocket.
Yeah. This is so important. So Nick, let me ask you this, because before you came to us and before we collaborated years ago, you really came from a tax family. I mean, your father was a CPA, you've been a CPA. That's kind of the lens that you've been for years.
Absolutely.
What is one of the reasons you think that this is often missed, of people don't maximize their advantage on the way out?
Well, it's not something that they really teach you from a continuing professional education standpoint, from a schooling standpoint.
You mean they don't teach a CPA this?
They don't teach CPAs this. They're not, the emphasis is not how do we teach you as a professional ways to save your clients money? It's how do you file a compliantly filed tax return, making sure that you're following all the rules, which of course is very important. However, where I think we've all come together to shine is our proactive approach to going out of our way, to sourcing deals, to utilizing the tax code, putting together holistic plans that come together, especially in a situation like this, to really move the needle.
Yeah, and I think this is something, listen, over the years of doing this and helping families, kind of building the overarching infrastructure to do this well at a high level, one of the things we've been able to do for families just like you through some of the companies that we have is bring to the table ideas that help you maximize your wealth. Listen, as you've lived your life and made income, you've probably had a thought year to year, even if you have a CPA, gosh, there's got to be something else that I can do to save money in taxes. Oftentimes, the reason the CPAs don't bring those ideas to you is not because they don't care. They're well-intentioned, probably good people, but sometimes they are just not qualified with the information necessary to bring you what you need to know to maximize your situation. So as you're looking at selling your business, I want to urge you and encourage you to take some time, click on the links below, connect with our team. We've done a great job of helping wealthy families throughout America not only protect, grow, reduce taxes on their wealth, but also package and sell their businesses, maximize value, and maximize profit on the other side that they get to keep as well. Be blessed. We'll see you next time.